You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 21st day of August, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the trading day. We do two every trading day. The first one is our live training room, which is reserved for members only and those taking their 1 week free trial. If you have not taken your 1 week free trial, just go to mytradingiq.com. At the very top of the page, there's a link, 5-day free trial, no credit card required. Just click that purple button, fill out the registration form, and keep in mind, it doesn't matter what day of the week or weekend or hour of the day you sign up for the trial. Once we get your desktop set up, get your indicators indicating, you'll get 5 consecutive trading days, even if it stretches over a weekend. And when you take the trial, you get access to more than just the live training room. You get access to all the resources that our members have access to. There's no credit card required. I want you to have a clear head. I want you to pay attention to what's happening and to the resources available to you so that at the end of the trial, you can make a well-informed and intelligent decision as to whether or not trading is right for you. This is our daily schedule, which we do our best to stick to each and every day. So we're going to jump into our daily devotional. And this week, our topic is Faithful Man or Woman, Devotions for Living in Faithless Times. And if you've looked out your window lately, you probably already know that we are living in some pretty faithless times. It's sad, but true. It's the hand we've been dealt. Our scripture today, Proverbs 29, verse 11. Pretty short. This is from the Message translation. A fool lets it all hang out. A sage quietly mulls it over. Again, Proverbs 29, verse 11. And that was from the Message translation. So, in these faithless times, can you and I, all of us, be the man or woman who holds back anger? Getting cut off in traffic, being held up in the grocery aisle, sitting next to a talker in the theater. We all have things that make us angry. Being angry in itself isn't sin. How we deal with anger could be, though. Proverbs 29:11, from a different translation, says, "Fools vent their anger, but the wise quietly hold it back." This doesn't mean we should always swallow our anger. That just causes an ulcer. It means we shouldn't let rage rule our actions. Think before you speak is more than good parental advice. It's the top anger management tip in an article by the Mayo Clinic. Second on the list, once you're calm, express your anger. Now, these tips fit well with what the Bible teaches. Ecclesiastes 7:9, control your temper, for anger labels you a fool. How many times have you acted in anger spontaneously? I mean, you were literally outside of yourself. And when the moment passed, you felt bad, foolish even. That's what the scripture says. And Ephesians 4:26 and 27 says, don't sin by letting anger control you. Don't let the sun go down while you are still angry. For anger gives foothold to the devil. It's healthy to take a moment to calm down when we're riled. But when we try to ignore what's bothering us, we do more harm than good. It's always best to address our anger while we still remember what we're angry about. Now, if you're married and have been married for any length of time, you have been in some knockdown, drag-out fights with your spouse. And whether it's an hour later or a day later, I grew up in a household where sometimes my mom and my stepdad, they wouldn't speak a word to each other for 2 weeks. But when everybody finally calms down, whatever the time frame, how often do you not even remember what started the argument? We've called each other every name in the book, possibly thrown things, but yet, once we calm down, we can't even remember what started it all. Now, that will make you feel foolish, for sure. Now, faithful men and women deal with their frustration in healthy ways, knowing that God will bring justice in the end. You can either trust Him and let go of your anger, or your anger will ultimately lead you to sin. The choice is yours. So ask yourself, what makes you angry? And how can you address your anger and simply give it to God? Join me in a word of prayer. Heavenly Father, your word in Proverbs 29 teaches us that wisdom comes in holding our peace, controlling our emotions. So help us, Lord, to respond with calmness and discernment instead of letting anger lead our actions. Grant us the self-control to reflect your grace even in challenging situations. May our words and reactions bring honor to you, showing the world a heart that is guided by your wisdom and your love. It's in Jesus' name, believe and pray. And everybody said, amen. Amen and happy Wednesday. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Keep in mind, this afternoon at 2 p.m. Eastern, we get the minutes of the last Fed meeting. That's at 2 p.m. Eastern, and that can indeed be a high-impact news event. So be prepared for that. Best position ahead of any high-impact econ report is to be flat. This is not the market we grew up with or the market of our fathers. It used to be that good news always sent the market higher and bad news always sent the market lower. But with the internet and the 24-hour news cycle, that's just no longer the case. So ahead of a high-impact econ report, the best position is someplace where your hand is away from the mouse. Let the news come. Let the market react. And when the market resumes its normal rhythm, that's when you want to get back in the water. Okay, here are the numbers. Currently, the Dow is down 35 points. The NASDAQ is up 8. S&P 500 up 3.5. The Russell 2000, our man in the street, is up 12. No movers, no shakers, pretty quiet, sideways action. In the commodity basket, on the other hand, crude oil is down 83 cents, trading 72.34 last. That's a drop of well over 1%. Gold down $5.20, trading 25.45.40 last. Silver basically unchanged on the session, trading 29.52 last. In the Asian markets at the close, the Nikkei dropped 111 points. The Shanghai fell 10. The Hang Seng dropped 120. And in the European markets at the close, FTSE up 10. The DAX up 94. And for the DAX, no, it's only half of 1%. The CAC up 38, which is also half of 1%. Basically, no movers and shakers across the board. It was a red day in Asia. It was a green day for the UK. Not a big green day, but it was green. And here in the US of A, it is a mixed Radio Wednesday. The Dow in the red, and the other three major indices barely in the green. I suspect that by the end of this broadcast, you could see those other indices in the red as well. It seems to be the direction the market wants to move, as traders position themselves for the Fed minutes, which again will be out this afternoon in less than 2 hours, 2 p.m. Eastern. Yep. All right, let's take a look at the news. What do we got? Big Pharma in the news. Pharmaceutical giant Eli Lilly's weight loss drug. I'll try to pronounce this properly. Wish me well. Tirzepatide was found to reduce the risk of developing type 2 diabetes by 94% among people with excess weight, according to a study released yesterday. The 3-year study is the longest completed study of the drug and involved observing the effects of the weekly injectable in more than 1,000 patients pre-diabetes who were obese or overweight. The study showed those who took the highest weekly dose at 15 milligrams saw a nearly 23% reduction in body weight on average and a 94% reduced risk of developing diabetes compared with pre-diabetics who took a placebo and only lost 2% of their body weight on average. Tirzepatide is the active ingredient in Eli Lilly's weight loss drug, Zepbound, and its diabetes version, which is called Mounjaro, both of which have gained popularity due to their aid in weight loss. Eli Lilly is the world's most valuable pharmaceutical drug maker with a $900 billion market cap and has seen its shares rise over 60% this year. In India, the Antitrust Commission there has cast doubt on a proposed $8.5 billion merger between Disney's India operators and Indian giant Reliance, arguing that the deal's current terms are anti-competitive. The Competition Commission of India sent private notices to these companies requesting further concessions within 30 days to keep the deal afloat. Now, the proposed deal would give the joint venture broadcast rights for top leagues in cricket, the country's most popular sport. Now, these numbers will blow your mind. Roughly 100 million people tune in for matches in the renowned Indian Premier League with a total fan base of over 750 million. That's more than double the U.S. population. The new entity would control 40% of all TV advertising market share in India, with over 120 channels and 2 streaming services. Reliance is India's largest public company by market cap and is owned by the billionaire Emini family. Disney's CEO Bob Iger claimed the move would de-risk Disney's operations in India amid growing competition. And the world's oldest person has passed. Maria Moreira, the world's oldest known person, has died at the age of 117. Born on March 4th, 1907, in San Francisco, she moved to Catalonia, Spain at age 8. Moreira witnessed major historical events, including 2 world wars, the 1918 Spanish flu pandemic, and she became the oldest known survivor of COVID-19 at age 113. She was very active on social media as Super Avia Catalana, or Super Catalan Grandma, amassing nearly 19,000 followers. There are approximately 722,000 centenarians, those aged 100 and older globally, with 108,000 in the U.S. Super centenarians, those aged 110 and older, are rare, with about 250 to 300 worldwide and roughly 60 to 70 known in the U.S. Morera credited her longevity to enjoying nature, good company, avoiding toxic people, luck, and genetics. Some studies today suggest the maximum human lifespan could be between 120 and 150 years. The oldest verified person to have ever lived died in 1997 at the ripe old age of 122. The current oldest living person is now 116-year-old Tomiko Ituka from Japan. So what do you get when you combine a first mover in a new technology with a $1+ trillion market? You get Miso Robotics. And you can be an early investor. Miso automates the fry stations for fast food's largest brands, helping to solve the worker shortage while improving quality and consistency. Now, it's very rare that I eat fast food fries, but most of the time they're inedible. I remember as a kid, fries, they were crisp and, well, they tasted good. That's why they put them in the Happy Meal, make the kids happy. But now, I don't know what they've changed, but whether it's McDonald's or Burger King or wherever you go, they either have too much of a potato-y taste. Again, I understand fries are made of potatoes, but that edge that they used to have, that crispness, seems to be gone. But Miso claims they're going to fix all that. Miso's 150,000 plus hours of training in real kitchens, from White Castle to Jack in the Box, gives them the first mover advantage in this $1 trillion industry. Now Miso is ready to scale, aided by a collaboration with NVIDIA. With Flippy Fry Station, that's the name of the product, Miso is targeting 170 fast food brands and 100,000 plus potential locations. Flippy can boost restaurant profits up to 4x, fit into more kitchens, and installs in just hours. All told, it's a $4 billion opportunity for Miso. So if you're looking for a long-term investment, this might be worth doing a little bit of research, because that's a huge industry. Now, obviously, there is a downside. Those people back behind the counter, every time that buzzer goes off, running and grabbing that basket of fries and shaking the grease out of it and dumping it under the heating lamp, those jobs are going to go bye-bye. So this is one of those types of investments. While from a monetary perspective, it looks quite compelling. But from the other side, it doesn't. Well, is it the way of the future? Are we old fogies who just hang on to investments that actually benefit not only the economy, but the world? I guess that's a moral dilemma that each investor has to sort out for themselves. And speaking of losing jobs, apparently we lost a whole lot today when they used a different calculator. The U.S. economy employed 818,000 fewer people than originally reported as of March 2024. That seems like more than an accident, showing that the labor market may have been cooling long before initially thought. The revisions are a yearly practice from the Bureau of Labor Statistics. Final revised numbers are expected to be released early next year. The report released today, this morning, showed the largest downward revision to the professional and business services industry, where employment was revised down by 358,000 during the period. Leisure and hospitality saw the second largest downward revision of 150,000. Now, the report moves down the monthly job additions seen in the U.S. economy over the time period to 174,000 from 242,000. How does anybody make that big of a mistake? Maybe you wonder. Ford, which trades under the symbol F, is revamping its electric vehicle strategy, canceling and pushing back some of its projects as the company looks to get a hold on higher EV costs. The changes come as Ford sees smaller, cheaper EVs as the future, with hybrid technology reserved for powering larger vehicles. Starting off with the larger EVs, Ford said it is canceling the upcoming release of a large 3-row electric SUV in favor of leveraging hybrid technology for its next Gen 3-row SUVs. The updated changes to this product strategy will result in Ford taking a special non-cash charge of about $400 million for the write-down of certain product-specific manufacturing assets, and could result in a further $1.5 billion charge in later quarters. As a result, Ford stock is up over 1% today. Meme stocks are back in the news. In fact, they've come roaring back. In the 2 weeks following the lows on August 5th, the S&P 500 added $3.7 trillion in market capitalization, with the Magnificent Seven stocks accounting for $1.6 trillion of that. While NVIDIA and the artificial intelligence trade are leading the rebound, the risk rally has broad participation, even from off-forgotten corners of the market like the meme stocks. In May, Yahoo Finance named 5-day meme stock volatility trigger. The list of stocks that were part of this trigger includes, of course, GameStop, AMC, Carvana, Beyond Meat, Kodak. Who even knew Kodak still existed? And Palantir. Oh, and also Coinbase. Any up or down moves among members of this group greater than 3 standard deviations measured over the trailing quarter are recorded and aggregated. When there are at least 3 triggers within a rolling 5-day window, a signal is generated. Since the August 5 low, Carvana, Palantir, Beyond Meat, and Coinbase each registered volatility triggers, with the composite signal peaking at 7 on August 9th. The all-time signal peak going back to December 2020 was 14, recorded on January 28th of 2021 during the original GameStop frenzy. And last, Target may have solved a major problem. On a call with reporters, its CFO and COO told Yahoo Finance that the company has hit a plateau when it comes to shrink, including retail theft. Inventory shrink was one of the tailwinds to profit in the quarter, and as we stepped into the year, our aim was to have shrink plateau, and so to improve from the deterioration we've seen over the last couple of years, 2 quarters in, we're achieving that and then some. Shrink can be the result of theft, damage, or just plain poor record keeping. In its second quarter, Target's 28.9% gross profit margin beat estimates, up from 27% a year ago. Target said shrink increased by more than $500 million last year compared to 2022, representing about 50 basis points of incremental rate pressure. Profits took a $700 million hit from the issue in 2022. From 2019 to 2023, the company said shrink cost reduced its operating margin rate by a cumulative 1.2 percentage points. Things that we feel good about are the progress we're seeing in our partnerships at the federal and state and local level. The work is ongoing, and the company is hoping to keep making progress in the quarters ahead. Part of the strategy included closing 9 stores at the end of last October. Oh, so that's how we stop people from just walking out of the store with stuff. I was in the store the other day, and some guy came in, just picked up a case of beer, and left. I saw him. Cashier saw him. Nobody said a word. Now, Target says we cannot continue operating these stores because theft and organized retail crime are threatening the safety of our team and guests and contributing to unsustainable business performance. The closed stores included 1 in Harlem, New York City, 2 in Seattle, 3 near San Francisco and Oakland, and 3 in Portland, Oregon. At some hard-hit stores, Target also installed locking cases for prone-to-theft merchandise. When you go into a store today, I mean, practically to buy a bar of soap, you got to have somebody come unlock the door. Why don't they just hire armed guards and put 1 on each aisle? That type of deterrence would prevent them from having to close stores. And eventually, people would decide, okay, maybe this isn't the best way to make a living with organized retail crime. Other tactics include investing in additional security members and third-party guard services, but they aren't allowed to do anything. And training store leaders and employees to protect themselves and de-escalate potential safety issues associated with organized retail crime incidents. I say their solution is no solution at all. Logic 247, that's our 24/7 around-the-clock E-mini alert service. Not just E-minis, also crude and gold and silver and the euro and bonds. We're currently in week 316. Over the last 316 weeks, we've issued over 17,600 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure, and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. This week, since the markets opened Sunday night, we've issued a total of 34 alerts. One never triggered. Still waiting on the outcome of 8. That gives us 25 actionable alerts, of which 4, or 16%, would have been stopped out, again based on market structure, and that simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, this recap was valid as of 6:30 a.m. Eastern this morning. There have been additional alerts since then, plus we were still waiting on the outcome of 8. So this afternoon, this evening, Valerie will update the recap and we'll share that update with you tomorrow. Now, the logic alerts are designed to help our members learn how to read a chart, how to spot entry points, initial targets, additional targets, and obviously to understand the final trade to target. Now, 316 weeks is a very long time, but long before that we had our CTAs, or concierge trade alerts. They're a little bit different in a couple different ways. The logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. as opportunity presents itself. Futures trade around the clock, and we have traders around the globe. The CTAs are published as a static report shortly after the Globex Open each evening. Last night was a lot later than normal. They're usually out by 6:30. Some nights as early as 6 o'clock. That's when the market opens. But we were in no rush last night, as the market seemed to be in no rush to go anywhere. So at 8 p.m. Eastern, all of our members and trial members had all of these targets. If price gets above the 30-minute BBC, it's attempting to reach the long target. Price gets below the 30-minute BBC, it's attempting to reach the short target. That part's pretty simple. Now, when the report is published, the first thing you want to do is break out the 30-minute chart of the markets you actually trade. Make a note on the 30-minute chart where price was at the time the report came out. Draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to keep you on the right side of the street. Now, with the logic alerts, you get an entry price, an initial target designed to help you get your goal for the day, and additional targets, and the final trade to target. For the CTAs, this is where you find out whether you've learned how to read the chart or not. This is where you get to look left and read the chart, spot the entry point, and understand why that's an entry point. And then, whether it's a long or a short trade, you look for the areas where you're going to find potential resistance. That's what PR stands for in the logic alerts. Or if it's a short trade, PS, potential support. Price flows from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. This is where you should also be pretty in touch with how price behaves at a weekly trading zone. Price is always trying to reach a weekly zone. It's above the 30-minute BBC, it's trying to get to the weekly zone above. If price is below the 30-minute BBC, it's trying to get to the weekly zone below. published the zones since December 14th of 2009. So we're closing in on 15 years. They come out Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Just resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. So let's take a look at the daily chart of the S&P 500 E-mini futures. Now, chances are you don't trade a daily chart. However, institutional traders, the ones with accounts in the hundreds of millions and billions and trillions of dollars, they do. In fact, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, it has everything to do with account size. The size they trade in is literally what moves price. So whether you trade futures or stocks or crypto or Forex or ETFs, if you'll train yourself to just spend a couple minutes with the daily chart of whatever you're going to trade before you drop to your smaller time frames and start trading, I think you'll find that over time your results will change for the better. Yesterday, we were sitting right on top of the 38% fib extension. We clearly have a bullish cross. Okay, price is above the BBC. So the question, do we have a leg, a retracement, and a leg? If so, we will take out the all-time historic high. Or do we have a leg, a very deep retracement, which will be followed by a leg to the downside? It certainly looks bullish from this point. We talked about the next major resistance overhead being the 50% fib extension, which was also basically the high of July 18th as well. So we ran up and hit the 50. We came back to the 38 for support. So for now, price is trapped between the 38% fib extension and the 50% fib extension. And this high right here is currently where price is sitting. Right here. If we get through the 50, then it's up to the 62. And if we break through that 62% fib extension, then there's nothing to stop us from challenging the all-time historic high. The question, of course, then will be, do we break through and put in a higher high? Or do we end up with a big double top, which will most likely send the markets substantially lower? I'm very surprised that revision on the jobs numbers did not have a bigger effect on the market than it did today. I think everyone, especially institutional traders, are waiting to see what's in those minutes from the last Fed meeting, which will be out at 2 p.m. Eastern. So give it a try. Spend 2 minutes with the daily chart, identifying where major resistance is, where major support is. See, if we drop through the 38, then we've got the low of yesterday, then the step line, then the 24% fib extension, then the 24% fib retracement. Gap blue and climbing here is potential support. And always, the pullback to the BBC holds more often than it doesn't. We traded through it back on May 3rd. Okay, price traded through the BBC. That's the green line, stands for bull bear cross. Bullish above it, bearish below it. The pullback holds more often than not, but eventually it will trade through. And in this case, when it traded through, it pulled back from below, and the pullback held. And that gave us a leg, a retracement, a leg, and one of the longest consecutive daily green candles in my memory. Very, very unusual, but it is what it is, and you got to trade what's in front of you. So how do we close today? High of the session, low of the session? Just know that price is trapped between the 38 and the 50 fib extension until one of them gets broken. And by looking at the daily chart, you'll know where the major areas of support and resistance are. All alerts, logic, and concierge are created on the 30-minute chart. There's nothing magical about 30 minutes. It's simply the time frame I chose many years ago, and it's served me quite well. So if it's not broken, I guess we leave it alone. This is very unusual trading action. This whole week has been unusual. Yesterday, the ES did drop to the weekly trading zone at 5614/15. Support, which sent us up to the BBC, resistance, which sent us back down to the zone, support. Whenever price drops to a zone, we expect support. When it rallies up to a zone, we expect resistance. So here's the open last night. The vertical line separates today, Wednesday, Tuesday, back here's Monday. So the markets opened last night at 6 p.m. Eastern. We moved up to the BBC. We attempted the long target, but we came a little bit shy. 56.30 3/4. The target was 2. So price pulled back to the BBC, blue and climbing, turned to red and falling. But we didn't fall very far. We fell to the early lows of the session, which also happened to be that low right there from yesterday. When the market finds support, it's then going to go look for resistance, which it found at the long target, which was that high right there from yesterday. So price comes back to the BBC. We get below it, but we aren't able to take out these lows. So up we go. We hit the long target. We get a retracement to the BBC. The pullback holds. Put in a higher high. And another pullback to the BBC and a higher high. Now this high lines right up with these highs from yesterday afternoon. Okay. This was an odd candle. It spiked it. It was like on fire. This was a huge green candle. Look where it ended up closing. Below it turned into a red candle. It was green all the way up. But then when it got back to the point where the candle opened, it went one tick below, it became a red candle. And it traded all the way down to these early overnight lows. Support. Sent us back to resistance. Back to support. The zone, again, when price drops to a zone, we expect support. This zone is 5614/15. Support has now sent us up to resistance at red and falling. Blue and climbing, bullish, turns to red and falling, bearish. But we are above the BBC, so price is trapped right now. We need to take out these two highs before we think about trading long up to the high of the session. Or we need to see price drop below the BBC, and then we can trade back down to the zone below. Right now, the market's going sideways, nowhere fast. On the Dow, here's where the market opened last night. Came just shy of hitting the long target. Got a retracement to the BBC. Another move up to the long target. Back to the BBC. Back to the long target and the zone. And we spiked the zone 1, 2, 3, 4 times. But every time it got rejected. On this rejection, it came all the way back down to the short target and the zone below. We came down to this weekly zone 1, 2, 3, 4, 5 times and got rejected each time. And now price is pushing its way back up towards the BBC, which we expect to be resistance until proven otherwise. On the Russell, here's where we open, right at the weekly zone. We've got blue and climbing as support, and so that walked us up to the BBC. Above it, we get a pullback, a leg and a retracement, a leg, a retracement, resistance at the zone, which sends us back to support at the BBC, which sends us back to resistance at the zone, which gives us another pullback to the BBC, then resistance at the zone sends us all the way down to the zone below, to the tick. These are the zones that were published Monday morning at 6:15 a.m. Eastern. Support sends us back to resistance at the long target, and we're just kind of jammed up, rolling sideways here, right around this zone 2164/65. Only one of 3 things happens when price reaches a weekly trading zone. 70% of the time, it's going to be consolidation. 20% of the time, rejection. 10% of the time, the slice. That's when a 30-minute candle slices through a zone like it's not even there. When that happens and it runs out of steam, it will typically retrace back to the zone it sliced through and then continue in the direction of the slice. That's what it did. On the NQ, we opened at the weekly zone, consolidated a few hours, and as is the other markets, we got above the BBC and attempted a run at the long target. Just wasn't enough buying pressure. So we dropped back below the BBC along with red and falling and found support again at the zone. And we again consolidated. Support sends us to resistance. Resistance sends us back to support. Back to resistance, back to support. Here we put in a slightly higher high, which continued. And then we had the drop. And this huge candle, the opening candle on Wall Street from 9:30 to 10, that's typically the largest candle. But today it was the 10:30 to 11 candle. And we've come back down to find support at the zone, and now we're back up against resistance at red and falling. So the potential for a move back down to the zone is certainly in the cards. Okay, Michael's here, so when we come back, we'll pick up with crude. Michael's going to give us a recap of what happened in the live trading room this morning. Then we'll do some live trading on TradingView. And then I'll finish up the recap and wrap things up with our good word for the day.
All right. Here we go.
Looks good.
All right, here we go. I am getting the right thing right here. Here it is. All right. Good afternoon, everyone. Today is Wednesday, the 21st day of August, 2024. Woo, 21st day of August, 2024. If you have not taken, I'm excited because we only have 5, 6, 7 days left to the 24/20 blueprint. If you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. When you click on that, there is no credit card required for the trial. Okay, no credit card required for the trial. Click on that purple button. And it's going to bring you to this registration page right here that only has a couple days left in it, but this will get refreshed if you take the trial now. You will be able to attend the remainder of your trial next week if you start up your trial today or tomorrow or Friday. Anyway, that's how you take the trial. All right, down here, all we ask for is your name, first name, last name, email, and phone number. 5 multiple choice questions. And down here, your NinjaTrader machine ID. Okay, if you have it, give it to us. TradingView login ID. If you have that, give it to us. If you have both, give them both. If you don't have either one, get your TradingView login ID. Right, that's what's going to get you the charts. You will get a demo DOM with that. Not really much you can do with that DOM. I mean, you can put trades on and off, but I don't recommend you use it long term because it's redundant and it adds another layer of communication. But anyway, hit the register button and you'll be sent everything you need to get into the room in the morning and to get your indicators indicating on your desktop. All right. So today was a struggle. I did put one trade on right at the beginning that if I would have paid attention to it, it would have gotten us the goal for the day, but I put it on by accident and it did give it enough to get the goal for the day, but I didn't count it. And so instead, the next trade that I put on was a stop out of 36 ticks on the NQ. And so it took a little while to get back from that. The markets were kind of weird this morning. And Dwayne was just showing you had that. Usually our big candle is in the pre-market or right at 10 o'clock. Today, the big candle was at 10:30. And so things are kind of weird the way it all came together today. And I'm pretty sure Dwayne explained to you that we had an unexpected, unsettling news event today about the employment information. And that was thrown in at the last minute. And then, oh, by the way, all the numbers that we've been telling you have been off by 1 million jobs. Yes, so it's all been a bunch of garbage all the way through, which is what I've been saying the whole time anyway. Anyway, today, I said all that to say this. We're up 12 ticks on the NQ, 36 ticks on the Russell, 30 ticks on the YM, and minus 10 ticks on the ES. Put us at plus 265 this morning, but it took forever to get the goal for the day. It took 86 minutes and 8 trades. I think it was actually more than 8. No, it was 8 trades to get the goal for the day, but I think I had more than 10 trades. I'm not exactly sure. This is right. 86 minutes and 8 trades to get to $3,300. That was $165 a contract, I think, with 20 contracts on. And on the month now, we're at $8,442 over 15 trading days, averaging $562 per contract per morning session. On the year, we're now at $66,395 with one contract, averaging $425 per morning session. Okay, with one contract. 24/20 blueprint, if you started with one contract, this number jumped up significantly today because it took us an hour and a half to get our goal. If you started with one contract and quit trading when you got your goal for the day, so far this year you had to work just about 50 hours now, and you would have averaged $1,859 per hour. If you started with me last year at the beginning of the year, you'd be at 20 contracts now, not at 8, you'd be at 20. And if you did the same thing, the same 50 hours, you'd now be averaging $7,178 per hour. Okay, now let's get into the actual trades. And we'll see how many trades we actually did take in here. Now I have the YM here with just a little bit of stuff on it because I was using it for the lesson plan at the end. I know lesson plan got kind of messed up today because I had not gotten my goal by the allotted time, so I kept trading until I got the goal. So let's just do a count of our trades. There's one on the YM. What did I show? 3. Right, and there's 1, 2, 3. Okay, so I showed 3 trades and I got 3 trades. Okay, so on the YM, our first trade, this is on the 7 range. We're actually trading on a 19 range this morning. So let's go back to the 19 range. The 7 range looks like it produced a lot better results. We'll go back to the 19 range and we get to today. Here's our first trade right in here. We ended up with a break even on that one. Our next trade on the YM, we had a plus 10 and then we had a plus 20. So I don't know what happened to that other trade that I saw a minute ago. But we had 3 trades, a plus 10 and a plus 20 were the last ones that we got. We ended up with plus 30 on the YM. Now, during the break, there was a long trade right here on the 19 range. There was a long trade right here that went about 19-20 ticks, and a short trade right here that I don't know if that went enough to get the stop to break even. 97 had to go down to 87, and it went down to 89, so that would have been a stop out right there. And that is what the YM looked like this morning. Now, if we were to just hide that for a second and turn that on for a second, and just go in here and say, okay, anytime the ribbon is spread, let's put the rest of these in here. Anytime the ribbon is spread, if you pop out of the oversold and take a trade. Anytime the ribbon is spread the other way, if you pop out of the overbought and take a trade. How many trades did you have? You had one there, one there, one there, one there. You had one here, one here, one there. The ribbon has to be spread. Remember, spread or spreading. So one there, one there, one there. And that was it this morning. So these right here were in the pre-market, so those don't really count. But this one right here, still in pre-market. This one's okay. So that's 1, 2, 3, 4, 5, 6, 7, 8. 8 that triggered during the morning session, and one of those would have stopped out. It's coming, guys. That is the YM this morning. We ended with plus 30 on the YM. The Russell is the next one. So on the Russell, we only had a couple of trades. Okay, and that is correct. It's on 19 range. We had one here. Our first trade, we picked up 10. And the next trade, we picked up 26. So we had 2 trades there on the Russell. But you see in here, it had all this junk. For a long period in here, it seemed like it had all this junk. And when it made this big move up, this is that one candle that Dwayne was talking about. It made this huge move up, and then it made the huge move right back down. So it's been really messy today. It started out over here with this huge move down. You see that huge move down? And that kind of set it up for the range. The range was like from here to here this morning. And then it broke out of both ends of that range and then went right back in it. If you look from here across, all the way over to here, and here across, all the way over to here. After this move right here, everything else has been inside this move right here. So the markets have been a mess today. Now we have FOMC meeting minutes come out this afternoon. That's kind of a big deal. It's coming out at 2 o'clock. So you're going to be able to see what they were saying in the meeting, what they discussed, and it should be enlightening. Now, yes, we just had the one trade right here that we stopped out on, and we were minus 10 ticks on that one trade. That was it. You can see a whole bunch of no trades on here to begin with, and then one more opportunity. One more opportunity here at the end of the session. I'm sorry, that was in the middle of the sort of pseudo lesson plan. We have 2 of them right there. Both of those would have stopped out if I had done those 2 trades. And then not a whole lot. Now, let's just go and look at this really quick. If we just had that, about that. Whenever the ribbon spread, we come out of the overbought. 1, 2, 3, 4, 5. That would have been the first stop out. Oh, the ribbon's not spread there. Sorry. 1, 2, 4. The ribbon's not spread. The ribbon started to crunch up. Okay, so 5. The ribbon started to crunch up again. And the ribbon's all crunched up. 6, 7, 6, I guess. 6 trades this morning. Doing it that way. This is on the ES. The S, which normally doesn't give all that many trades, you would have had 6 opportunities this morning. That will work out just fine. Easier stuff. Thanks. Let me put this back on the way that it was. I guess the only thing that I had on that was the thing I took off really was the context in the no trade zone, right? Everything else is still there in the slingshot. Put that back. I don't have my question box open. I should probably open that up. Okay, no questions as of yet. So on the ES, we ended up with -10. Okay, and the NQ. Now the NQ is what got us in the beginning. And 1, 2, 3, 4 trades on the NQ. That's what I showed. 4 trades on the NQ. This is one that got us in the beginning. We stopped out on that one. And then we got a little bit back there. Got 12 ticks there to get us to 24. And then 20 ticks there. That got us to -4. And then 16 ticks here. That got us to +12. I had forgotten to enter that in. But that needed to put in a lower swing, which it never did. Actually, I guess it did put in a lower swing right here. It's just a hair lower. That would give me that short trade right there that I didn't do or see. This long trade right here that I didn't do or see. This long trade right here, same thing, didn't do or see. I think I was looking for a higher swing through here. When you get into the break, there was a blue arrow there, a blue arrow there, both worked out well, and no other blue arrows. So if we go and do the thing on this one, let's just get rid of the context and the no trade zones. Just go with the outer bands and this. So when the ribbon is spread, anytime you come out of the oversold, 1, 2, that was during the break, 2 for 2 during the break. During the morning session, though, on the NQ, this is on the NQ 31 range. Oops, went back too far. Here we go. Ribbon's got to be spread. So we would have had 1 right there. It would have stopped out. A follow up there. Right there. But either way, it would have stopped out. Then right there, you would have gotten some back. Gary, yeah. Right there, you would have gotten some back. And right here, well, the ribbon still looks like it's spread in there. So that would have stopped out too. Then the ribbon got all crunched up, so you wouldn't have anything. The ribbon was actually crunching up all through there, so you wouldn't have anything. The ribbon in here is spread, and you would have 1 trade there. Then the ribbon gets crunched up again. Then the ribbon is spread again. You would have had 1 right here. That would not have worked out very well. Then the ribbon gets all crunched up again, and in here. And it looks like 1 right there where the ribbon is spread. Even with this, it would not have worked out very well. This is unusual that it has this many that don't work out well. Then you would have had 1 good one there, another good one there, another good one there, and going in the opposite direction. The ribbon's got to be spread when you come out. So right there would have been just 1. We missed all that, sadly. Another one right there would have been okay. The ribbon's starting to crunch up though. Right in here, it's spread out again. A little bit would have been a break even through there. And spread out going the other way, you would have had a long trade right in there. Super, yeah, right in here. In here somewhere. And right here. Then we got all crunched up again. Right here, it started to spread out a little bit. You would have had 1 right there. Spreading out there, but you didn't get 1. Spread out here, you would have had 1 there and there. And there, that wouldn't have worked out. It started to crunch up a little bit in there. Going back in the opposite direction, 1 there, 1 there. So it was tough today. With anything, with everything, it was tough today. But anyway, if you have not taken a free trial with us and you want to, go here to mytradingiq.com. Right here, click on that. Sign up here for your free trial, right? Click on the purple button. There's no credit card required for the trial. When you click on that, it's going to bring you to this page. All we ask for is your name, your email, your phone number. 5 multiple choice questions. If using Ninja, give us your machine ID. Not your Ninja ID, give us your machine ID. With TradingView, we do want your login ID. Give us your username or login ID. And we'll be able to enable the indicators for you. Okay. so the news today, this thing right here, 818. So 187, this is where I got that this morning, Dwayne. 187 was the previous. So the previous one was off by 187,000. Last check, they were off just a little bit. And then the next check, they were off 4 times as bad. So they corrected to the wrong side, 4 times as bad. That was when they were trying to pump up Biden. All those numbers. That's what that's showing right there. They're trying to pump up Biden. They're trying to pump him up a little bit, but didn't think they needed to. And then, well, the evidence is right there. All right, so when the crude inventories came out today, they're expecting a draw of 2.72 and they get a draw of 4.6. So that is a bigger draw than anticipated. FOMC meeting minutes coming up here, guys, in less than an hour. That's a high impact event. And then the Jackson Hole Symposium. Those of you guys who don't know, that's a thing out in Jackson Hole. It's a couple-day event, and it's not supposed to be significant because of the hours and all that. But whatever gets leaked out of that, it can have some sort of an effect on the market, depending on how it's leaked. But tomorrow morning, we have at an odd time. We have the jobless claims, which is normal time, but we have this stuff at 9:45 tomorrow morning. That's all high impact. 10 o'clock, we have the stuff that used to be high impact that is shown as medium impact right now, existing home sales and all that. I expect this to be horrible. This news right here. I expect that to be really bad. We'll see. We'll see what happens. All right. For right now, I'm going to try to put that in Q trade on. I think I'm not too late. I think. Am I? Has it gone into profit enough? It would have been right here at 65.75 and it ran up to 69.50, so it went 15 ticks into profit. 16 is where I move the stop to break even if I have the proper entry with a 31 range. 16 ticks is where I move the stop to break even. So it's borderline getting into this right now. But I did it. Here, I'm in it right now. Here it is. Okay, now my stop is 36 ticks. My target is 48 ticks. All right, so we're anticipating it's going to be up to 884 at least. 884. And this is 48 ticks is right here. So 884 is like another 20 ticks above that. We'll see what happens with it. All right, it is a valid trade. Everything there looks good for the trade, actually. On the ES, this is not a very good trade right here. Well, it's a valid trade. It's a black arrow trade, and it's pulled back. So that's it's pulled back to about the point where you would want to enter that type of trade, all right? Because it looks like it's going to run up and put in a higher swing, but it's got a long way to go to get up to the swing high, you see? But and it's kind of close to the ribbon. So if you were to enter this right here where it is, and it pulls back and bounces off the ribbon, it does give you the blue arrow trade. You'll still be in the trade, I think. Say if you entered right here at 34.50, you have a 10 tick stop. So your stop's going to be down at 32 even. So 32 even is down here at the bottom of that. So that'd still be an okay trade to take. Now this has to go 4 points. It's got to get up to 70 to bump the stop to break even. Okay, 70 is what it's got to get up to. And we'll see if it does. It should. It should easily get up to 70 and beyond. Okay, and we'll hit the break even button if it does. Okay, the ES, I have my order in on the ES to try to fill on the pullback, and it hasn't filled yet. Okay, well, you almost got up there, but not quite. All right, so there's the pullback on the ES that I was looking for. Okay, so I went long on the ES on the pullback, and I'm long over here on the NQ. The NQ almost went enough to get my stop to break even, but not quite. Right, not quite there. The ES, the 10 tick stop, I entered it the wrong place. I should have entered down here a little bit lower. But it's still going to put the stop down here in the middle of the ribbon, so I can still get the blue arrow trade off of that. Now the ES just has to go 4 ticks into profit, right? And it should get right up to here, at least, right up to there to 37. And while that's doing that, this should run up as well. We don't have anything over here on the Russell YM. We need one more tick here on the CS trade. That's got to get to 70. This has to get to 35.75. So we wait. All right, if we drop down below this level right here, then this is going to stop out on the NQ. Okay, if we get below that level right there, 58.25. Then, but things are loading up here on this side right now on the ES. See, this side is getting much bigger now. That side's getting smaller, this side's getting bigger, suggesting things want to move up here. Okay, now the last couple of weeks I wasn't really trading the NQ very much because the liquidity was so thin, but it's gotten better. That's why I started trading it again. Okay, the ES is really trying, it wants to get up there. We'll see if anything else opens up as it starts moving up. I don't see any questions anywhere, so we're just going to put these trades on and let them run. Let them work. Now, I'm waiting. Let me do that on that one here. Then we can go look at other stuff. What I haven't looked at today is I looked at this morning, and that's having a little bit of a bullish day today after having an ugly day yesterday. It's having a little bit more of a bullish day today. Let's go out here and look at Mara. Let's go all the way out and look at bonds, because there was a question about bonds this morning. On a 5-minute on the bonds, but I want to look at the bonds here on this time frame. Okay, using just the regular TV trades. I'm just giving some pretty good indications today so far on that range chart, on the 3 range. This needs to get up 4 ticks, and this needs to get up 4 points. Now, I'm curious. Yeah, okay, this is moving down. Remember, if it gets down below 58.50, it's going to stop out for sure. This is a new thing. This is no longer here. All right, we did stop out on the NQ. And that does not bode well for the ES trade either. I'm going to slide the ES over to the side for just a minute. Okay. And we'll shut that one off. Leave that one on. And shut that one off. Come in here, and I renamed that thing on the bottom to this. Okay. And I use this name up here. Just want to look at this on the bonds today and see how this did on the bonds. And did well. All right, let's go back down to 4 charts. Now the NQ ended up stopping me out. The ES has not stopped me out yet. I'm still in that thing. The NQ came within 1 tick of getting my stop to break even there. 1 or 2 ticks to get my stop to break even. But I follow the rules. Right? As soon as you break the rules, you're not following any rules. That is the trick of it. This should get up here. Now, this number changed a little bit. It used to be up here at 37, but it's moved down a couple of ticks. But this number down here used to be down here, and that's moved up. So I don't know what to make of that. The S has been, all the markets today have been really difficult to trade. It hasn't been as easy as it normally is for me today. It took 86 minutes to get the goal for the day. 86 minutes to get the goal for the day. And we need one more tick here on this. One more tick. There it is. Stop to break even. Here, I'm just going to use a regular break even button. Stop to break even. And we're probably going to end up with a break even on that. Yeah, we did. All right, so that was a long break even right there. And I did it on the black arrow right here. Now, the whole reason I did it on the black arrow here is in case we got the blue arrow. It would give us room to come down, bounce off the ribbon, and give us the up close, and we'd have a better entry on the black arrow where we were than what you get on the blue arrow right now. Now, either way, I can't take this trade right here. I can't take the blue arrow. Okay. But you see the blue arrow just loaded up the table with new targets. And those targets, they go from 35 up to 61. The first few of them are really close together, though. 35.75 up to 37.25. You have 3 targets within a point and a half. That shows that the range is tightening up here. And that doesn't surprise me. It's tightening up as we get into this FOMC minutes thing. So we are waiting. All right, if you go down to a smaller time frame on these other ones, like right here, we had this move up right here. Now this big move up in this time frame right here on the YM. So you had this huge whip. That's what I'm doing all day. It's been whipping around, big whips right at the BBC. If you get down to the smaller time frame, those whips turn into quite a few smaller time frame trades usually. Okay, using the same thing that I was just showing you a minute ago. If the band, the ribbon is spread, and you're coming out of the oversold, bam, there's one, there's one. That one, that would have worked out. There's one, there's one, there's one. Now the ribbon's got to be spread. I'm getting into where it's not spread right over here. It's got to come out of the oversold. And what is the oversold sit at right here? 85 minus 85. That's pretty good. So you just had a whole bunch of trades right in a row there. That would have worked out just fine. 1, 2, 3, 4, 5, 6, 7, 8 in a row. That would have worked out. Actually, 7 in a row. And over here on the downside, you had 1, 2, 3. That one wouldn't have worked. 4, 5, 6. 5 out of 6 on the downside. Good stuff, guys. Coming your way soon. If you are a passport holder, you want to be a passport holder. Okay. This is not going to be called this anymore. Right? That's why it's got the little thing on it. If I do that, I think, let's see what it does on the update. Updates the latest version. Yeah, it changes the name of it. Okay. Here on the 7 range, we're getting a bounce off the ribbon right here, and up close on this would be a long opportunity. 983 up to 991 is what you'd be buying on that on the YM. 991, the up close. The ES we ended up with the break even on. It's not doing anything now. And there's the up close, the 991 buy over there. Now I flip back to the 7 range just for right now. Now the stop on this needs to be 10 ticks. So we're gonna put that there. All right. Yeah, I'll just leave the target where it is, but the stop on the 7 range needs to be 10 ticks. And after 4 ticks in profit, the stop goes to break even. You see how it just bumped up a little bit right there really fast. It needs to get up. It wants to get up here above 998. Okay, and this wants to get up to the prior swing high over here on the ES. So we'll see what happens with it all. right, stop to break even on the YM trade. Okay. I'm just gonna actually drag this one up. Let's get rid of the there. Drag that one up. And all right, so where should this go? I'm liking it right up here right now. All right, that is the DOM saying 41,006. The swing high is right here at 41,002. Is what it's showing the swing high at. We ended up with the break even, but what it's showing the swing high at is 41,002. We had a second blue arrow on that. That's unusual that we get the second blue arrow. And let's see. We have, we're going sideways here. We need to get a higher swing over here. We need to get a higher swing over here. This stopped us out. It looks like it still wants to go up, but it stopped us out. We got a break even on that. And we ended up with a break even on that too. It's just the way the markets have been today. They have been difficult. It's just the word I want to use for it. It's difficult. All right. Well, it's just about time to wrap it up here, guys. We don't have anything else happening right now, so I'll just show you all how to take the free trial. If you have not taken it, go here to mytradingiq.com. Right here, click on the purple button. There is no credit card required for the trial. Just click on that purple button, and you will be brought to this registration page. Where all that we have, so it's your first name, your last name, your email, and your phone number. 5 multiple choice questions. Just fill out the multiple choice questions. If you have NinjaTrader, put in your Ninja ID. If you have TradingView, give us your TradingView login ID. That's all you have to do. Hit that register button, and we'll get your trial going and your indicators indicating for you for the duration of your trial. Okay, that is it, guys. With that, I can pass it back up to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Okay, it is ready.
Yep. Recap of the morning session.
Today it took 86 minutes and 8 trades to get to $3,300. 86 minutes.
Good job.
Thank you. Thank you very much.
All right, guys, we'll pick up where we left off with crude oil. Last week, when the crude inventories came out, it sent price higher. But the inventory numbers today have definitely sent prices lower. This is where we opened last night below the VBC. And we basically just went sideways. We were never able to take out this low initially. So eventually that pushed us right here ahead of the London Open. above the BBC. And that high, be these highs right here from yesterday. Vertical line separates today, Wednesday, from Tuesday, from Monday. As you can see, when price drops to a weekly zone, we expect support until proven otherwise. When price rallies up to a zone, we expect resistance until proven otherwise. So we finally made it up to the long target. Resistance based off this bearish cross right here from yesterday. Whenever you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be the resistance. We spiked it a little bit, and then we came right back to support at the BBC. On this pullback to the BBC, we still had blue and climbing. So that sent price back to the target and to the zone. Now keep in mind, these are 30-minute candles. So we had 1, 2, 3, 4 attempts to close above this weekly trading zone. And the fourth one, just when the inventory numbers came out, that failed, took us below the BBC, all the way down to the target and beyond. In fact, we got a low on the session of 71.75. The lowest weekly zone this week is at 69.60. Still got the remainder of today and Thursday and Friday. Big news event today, other than the unusual one that we had this morning that showed they had miscalculated the jobs this administration had created by almost 1 million. Interesting that they chose to fess up at this point. But we've got the perfect stack headed down. Price, step line, red and falling, BC. You gotta look left to figure out where the market is most likely to find support. And when it does, expect a retracement back to the BBC. And of course, we expect that to be resistance until proven otherwise, and potentially give us another leg to the downside. This step line has not started hooking right yet to cross red and falling, so that tells me we're probably not done dropping quite yet. Scroll way over. We can see that where we're at right now, right here at this low. See that? So where's the next potential low? Right here, 71.50. After that, 70.90. Just gotta look left. All right, from crude we go to gold. Gold is pretty much flatlined for the session, ahead of the Fed minutes. Just consolidation at the BBC, just sideways movement until the London Open. And at the London Open, we dropped to the short target support, sent us back to the BBC resistance, which sent us back to the short target, through the target, and down to the weekly trading zone that was published Monday morning at 6:15 a.m. Eastern. When price drops to a zone, we expect support. When we rally up to a zone, we expect resistance until proven otherwise. Price has now gotten above the BBC. We've got blue and climbing in the picture. So now you're going to look for potential resistance here, 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 and you've got quadruple top right there just during this session, right around 25.58 basically. Okay, get above that and then you've got a shot at 59 to 62. That would be $300 per contract traded. Silver, here's the open last night, price trap, resistance overhead, support below. We spiked that support to hit the weekly zone to the tick. Support sends us looking for resistance, which we found right before we got to the bullish cross. But as price came back to the BBC and found support several times, we hit the long target, which is that bearish cross. Remember, bearish cross, that's when the red line gets below the green line. A bearish cross leads to an extended move. First time price revisits that area will almost always be good resistance. And it was. It sent us below the BBC, but we were still touching it. We never pulled away from it. So we ended up back above it. We hit the long target again. But we hit it once, twice, 3 times, 4 times. And we almost made it to the weekly zone above. The high was 29.71. Is that right? And the zone was at 72/73. So resistance sends the market looking for support. We spike the zone down to short target. See where that came from? Right there. Support sends us back to resistance at the long target. We've gotten below the BBC, which we expect to be resistance until proven otherwise. Now, red and falling has gotten directly below price, which means it may well be on its way to becoming blue and climbing, which is bullish. And so there may be an opportunity to trade to the upside up to the long target, this swing high, and possibly even this swing high. With silver, you only need 2 pennies to reach your goal for the day. Silver's probably not a great market for a brand new trader, but once you get your legs, it can be a very good market. Had some really nice moves this week. There's Monday, it's Tuesday. Now today, sort of wide-ranging consolidation from zone to zone. And if in fact this curls up into blue and climbing, we could see all those areas I just pointed out, and even the zone overhead at 29.72. The euro opened here last night, dropped to the BBC. Wide-ranging consolidation. This is a market you definitely don't want to trade when you got price above the BBC, then below, then above, then below, then above, then below. That's just not fertile trading soil. Finally, we broke out to the upside, and once we took out this high right here, off we go, right up to the long target. Consolidated for an hour and a half. And now it's trying to reach that zone overhead at 111,700. And on the daily chart, as we discussed at the beginning of the broadcast, price is trapped between support at the 38% fib extension and resistance at the 50% fib extension. So how we close today will in part be a great reflection on how the market responds to the Fed minutes when they come out at 2 p.m. Eastern. Close above the 50 puts the next resistance at the 62% fib extension. And then if we get above that 62, then we're staring down the barrel of the all-time historic high put in on July 16th, 57.21 and a quarter. If the market does not like what they read into the minutes, course, we've got support at the low at the 38, low of the day, and the low of yesterday and the step line are pretty much lined up, and you've got potential support here. This is the 24% fib retracement based off the April 19th low and that July 16th high. So there's a lot of layers of support here. Chances are we get a retracement eventually to the BVC, and it's starting to look like another leg to the upside. Econ reports last week gave the appearance that we had gone from an uptrend, which we've been in since April, that we'd begun a downtrend. But it was actually pretty short-lived. The low came in on a Monday, August 5th, and that low was well, I guess we can't figure it out, can we? 51.20. Now, this rapid climb, I gotta tell you, that looks like a house of cards. I mean, we've almost done in the span of 1, 2, 3, 4, 5, 6, 7, 8. You know, we can call it 10 trading sessions. What it took the market to do from May all the way to July. Smells like a house of cards to me, but time will tell. We're heading into presidential election, the likes of which we have never seen before. On one side of the aisle, you've got a person who never received even one delegate vote, never even made it to Iowa. Somehow now finds themselves coronated as potentially the next president of the United States. Whereas on the other side of the aisle, we have a former president. And they say that, well, I won't even say what they say. But under the Trump administration, whether you're Democrat, Republican, Independent, doesn't matter. Times are pretty good. People were pretty happy. For the last 3.5 years, there's been a whole lot of unhappiness. In fact, the mental decline of our president for the last 3.5 years, it's been nothing but a cover-up. But they've pulled back the curtain to reveal the man behind the curtain. She tried to use that analogy the other day and she got it a little wrong, but that's okay. To become a member, go to mytradingiq.com. If you have questions, call 949-42-EMINI. Send an email to support@cfrn.net. When you become a member, you'll have 2 hours of live training every trading day in live markets. That's something 9 out of 10 new traders don't have. And ultimately, it's why they fail. Now, having someone to teach you how to trade means it's possible that you could become the 1 out of 10 who does succeed. We're going to give you the information you need. We're going to give you the tools you need to do the job. But what we have no control over is what you do with that information and what you do with those tools. Will you exercise self-discipline, self-control, you exercise patience? That's the big question. And that's something that you have to ask yourself. Are you willing to follow the rules? Are you willing to follow the 24/20 blueprint? Or are you going to take it and try to make it your own? I don't doubt that there's somebody out there who can do that. The whole purpose of becoming a member is that you don't have to reinvent the wheel. We've got a wheel that's been rolling pretty nicely for quite some time. When you become a passport holder, along with the 2 hours of live interactive group training every trading day, also known as our live training room, you have access to private one-on-one mentoring, no extra charge. The strategy you learn and the indicators you own as a passport holder are fluid across all markets and all timeframes. Price flows the same across all markets and all timeframes, whether it's futures or individual stocks, crypto, Forex, ETFs. Price flows from support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. Also, when you become a passport holder, you'll get the Logic 247 alerts around the clock. You'll get the concierge trade alerts when they're posted each evening. You'll get the weekly trading zones every Monday morning at 6:15 a.m. Eastern. And you'll be able to attend the members only workshop, which happens every Thursday night at 8 p.m. Eastern. That's tomorrow night. So if you've been on the trial for the past week, you should get an email today and probably again tomorrow with instructions on what you need to do to become a member. In the event you don't get the email, just call us or send us an email. It's that simple. Plus, you have around-the-clock support. And you're surrounded by traders who have gone from struggling to success. And it's a family-friendly environment where everyone's on the same page. There's no competition. There's only other traders waiting to help you with any issues that you may have. And it all starts here, mytradingiq.com. Okay, let's wrap it up with our good word for today. Yesterday, we talked about changing your expectations. And boy, the parallel for that between life and trading, it's pretty serious. Today, we're going to talk about memorizing scriptures. Now, that was part of something we discussed the other day. Colossians 3:16 says, "Let the word of Christ dwell in you richly." Before written languages were developed, memory was the only way to learn. In our day, memorizing has gotten a bad name as rote learning. But memorizing never makes your mind a duller place. Just the opposite. When we have stored wonderful words in our memory, we will have a much richer inner life than someone who doesn't. Eva Herman spent 2 years in a Nazi prison camp. She wrote how a young cellmate happened to recite the prayer of Saint Teresa. Let not trouble thee, let not frighten thee. All things pass. God alone changeth not. Patience can do all things. Whoever has God has everything. God alone sufficeth. When Eva saw how much this helped the girl, she began to repeat the prayer at the end of every day. Eva later wrote of how her time in prison was transformed by the words she had memorized. Now, this illustrates that the words we carry in our minds are available to transform any given moment. So when there is a verse of Scripture that really speaks to you, stop and write it on a card. Put it on a mirror in your bathroom. Put it in your smartphone. Write it on your calendar. Tape it to your dashboard. If you're an auditory learner, listen to the Scripture being read. Now, the internet, as in all things, there's good and bad. It's just like money. Money can be used to feed a hungry child or build a dirty bomb. On a $100 bill, no matter what you spend it for, the expression on Ben Franklin's face never changes. And because of the internet, you can now have Scripture read to you. The Daily Audio Bible, which I have been a great fan of for many, many years. If you've never been there, you never experienced it, just Google Daily Audio Bible. In fact, I think it's dailyaudiobible.com. Brian Harding reads the Bible every day. He's built quite an incredible community. Each day, you'll get some Old Testament, you'll get some New Testament, you'll get some Proverbs, and you'll get some Psalms. And if you show up or tune in every day, in 1 year, you'll make it through the entire Bible. From the beginning in Genesis to the end in Revelation. Brian's been doing this for, I've been a fan for 15 plus years. And he was around way before I discovered him. So remember that, your takeaway today, the Daily Audio Bible. Because I know sometimes life gets busy, you got to drive here, you got to go there. It makes it difficult to just sit and read. Now, I think there's great power in reading. In fact, I would suggest, if your life affords you the luxury, as Brian is reading to you each day, follow along in your own Bible. And each week he switches up the translation that he's reading from. Try it. dailyaudiobible.com. There's even an app you can download, put on your smartphone. And every time a new episode is released, which is every day, it'll pop right up on your phone. All you got to do is hit play. If you're a visual learner, light a candle and read these words. 1 John 1:5. God is a light, and in him there is no darkness at all. When God's word is rehearsed, remembered, and repeated often, it's like a stream of joy, peace, and strength that flows and carries your soul along with it. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.